Hello, everybody. Welcome back to Beer and Money. My name is Ryan Burklo.
And I'm Alex Collins.
And on today's episode, we're going to be talking about the new Washington state estate tax that is possibly looming, meaning they just released some details that are possibilities of what that estate tax would change to. It's not officially signed into law yet, but Alex and I just got word of it, and so we wanted to bring it to everyone's attention.
But it's on the governor's desk. It looks like it's going to go into law. There's some good news. There's some bad news.
Yep. So that's today's episode. We're going to talk about briefly on the federal side too. So even if you don't live in Washington State, like understanding this is a key piece when it comes to estate planning and how that deals with your finances. But before we dive in, Mr. Collins, I see you on popping something there. What are you drinking?
I am drinking one of your favorite beers, a sour.
No.
So this is it's Temptation. It's a sour put out by Russian River. It is just an amazing beer.
I like Russian River. I don't like Russian River sours. For those of you who are not on YouTube, by the way, you need to go on YouTube and definitely watch Alex spew the drink he just had.
Oh, that was funny.
Well, good, man. I am trying a new one. It's Big Block Brewery. I was there this past weekend, actually, with Andrea. Had a lovely time. And so I am trying their new, I'm looking at Mexican lager with lime.
Ooh.
So I've never had this before. So cheers.
Cheers, buddy. I mean, that sounds like a delicious summer beer.
It tastes just like a Modelo with a lime in it. So it's a lovely beer that is refreshing, to say the least. One day when it becomes 80 degrees here in Seattle, I'll drink more of it.
I don't know about your neck of the woods, but like we've got a ton of blue sky and it's starting to warm up and things are good.
Yeah, not on my end. It's been raining all day, so which is crazy to think. Alex is 15, 20 minutes, what would that be? West of me. And it's that big a difference, which classic Seattle. So well, let's dive into it, Alex. So there are some decent changes coming along for Washington state estate tax, and specifically around like what the exclusion numbers are, and then what the estate tax rates look like. Because, and the reason this is so big is, when's the last time that they updated this, Alex, in the state of Washington? Do you know?
I mean, it updated just a little bit, like back in like 2016, but prior to that, it was like 2012 or before. Like it's effectively been stuck at like just over $2 million for a decade or two. So it's nice to see it actually like indexed to something that isn't a dead index.
Yeah. So, which on the flip side, it might be increasing as the years go by. So that's maybe some good stuff. We'll see. Let's talk through it. But before we dive into it, you just brought up the 2 million exclusion ratio or exclusion as it is today. Let's talk through what that means for our listeners, because I think a lot of times, even when we're sitting down with clients, they don't realize how low it's been and how that affects them.
So it's effectively $2.2 million per person. And Washington is goofy. Like years ago, the federal estate tax and most states opted into this portability concept where like, okay, if I die and no planning has been done, my spouse can do planning at my death to take advantage of my exemption. In Washington, it has to be done ahead of time. And so you get these really goofy things where you can lose out on the $2.2 million exemption of the first death if you don't do proper planning ahead of time.
And real quick, what Alex is talking about, and this is what I was trying to get us to talk about, is what that $2.2 million exemption means. What that means is the first $2.2 million of your asset is not taxed by Washington state estate tax. Above that can be taxed. So if you're worth $4 million and you're single, You have 2.2 that is not taxed. Everything above that could be taxed at Washington State estate tax. If you're married, as Alex said, there's a portability aspect where you can maybe carry over the 4.4 in that example, but you have to have the proper estate tax documents in place and make sure that everything's squared away.
And to be clear, if you don't, like, your spouse isn't going to have to pay taxes.
Yes.
But then going from generation 1 down to generation 2, that's where you lose out on that $2.2 million exemption. This is why it's critical to do planning ahead of time. It's really, really important in the state of Washington.
And
And
these numbers, Alex, aren't high. Like we live
no,
in Western Washington. That's what I'll speak to at least now. $1 million homes are everywhere. This isn't right. To find $1 million home is like throwing a rock where we live. And that's not to say that we're surrounded by a bunch of billionaires. It's just to say this is what Washington State real estate is. So when you take that into consideration, and then you take into consideration and the assets that you've grown, and then throw on top of that life insurance, because while life insurance is tax free, it may still be estate taxable.
depending upon how it's owned and where it's located and a couple
Correct.
other factors. But
So
yeah,
when you add this all together to get to 2.2 or 4.4 isn't as far fetched as like the federal level, which is in that $23 million range, right? Or at least it currently is. That might also be changing.
Right. Well, and I can't tell you the number of times where like I've sat down with folks and asked them the question, hey, do you have an estate tax issue? And they're like, oh, no, we're nowhere near the $24 million number. And I'm like, oh, right. Well, in Washington, it's 4.4. And they're like, what?
Yeah.
And like, okay, we got a business worth $2 million. We've got a house worth $1.5 million. Like, okay, before we even get into bank accounts and second homes and things of that nature, we're already basically at that limit. And so now it's a matter of like, okay, well, we've got an estate tax issue. Let's have a conversation around whether we would rather wind up with an adjustment to a basis in these assets, or whether we'd rather try and pay estate taxes, or whether we'd like to try and avoid the estate taxes and eliminate the adjustment to basis, or reduce it. We're going to wind up getting hit with one form of taxation or another. It's really just a matter of like, okay, what is it that we're trying to do with the asset? And once we know that, once we know your desires and goals and dreams, then we can start doing proper planning.
Yeah, so let's get into the possible changes that Washington State is now kind of throwing out there. So what are you seeing out there, Alex?
Well, there's 3 of them. The first is the exemption is going from 2.2 up to $3 million. That is a win in and of itself. It's great news. It's going to hit less of that middle market, which is, kind of what they're looking for, what they want to go ahead and have happen. So that's change number 1. So it goes from 4.4 as a married couple, up to 6, which is great. The second thing is it's no longer going to be indexed to a dead index, meaning that it actually will go up in the future, at least for the foreseeable future. We'll see how long that occurs. But this means that we're not just going to get stuck at that $6 million level, and then in like 3 years, 4 years, real estate will have caught up again, and now we'll be back in the same issue that we have.
So real quick, I want to interrupt you real fast. I did the 2.2, 3 million, 13 years since 2012. It's a 2.4% growth rate. So they didn't quite keep up with the 3% inflationary type number, but to be fair, it did get raised.
Let alone what real estate has done in this area between 2023 or 2013 and now.
Yeah.
So that's the second benefit. Those are the 2 pieces of good news. Like, we like that it's going up. We like that there's now upward mobility with the number like that. Those are good things from a planning standpoint. The bad news is it got
before you say it. By the way, Alex and I have not talked about this ahead of time, so I'm about to guess what he's about to say in the third thing. Did they change the tax rates, like the tax tables?
Oh yeah,
yeah. There you go.
And the tax rates are going up a lot. So the first $1 million of taxation, so the first amount over that exemption level, stayed the same. The second $1 million went from 14% up to 15%. So an extra $10,000 on $1 million. not that big a deal, whatever. Like, okay, don't like it, but $10,000, not that shouldn't break the bank on, a $6 or $7 million estate, right? But the problem is it still keeps going up from there. So instead of it being 15 is the next step, it's now 17. Instead of being 16 is the step after that, it's now 19. Instead of being 18%, it's now 21%. And we get to the point where we cap out, instead of capping out at 20%, we cap out at 35%.
That's a big change right there. What's that cap out? What's that dollar figure?
So at a $9 million taxable estate, which means a $15 million total estate, assuming that you're married and get the exemption for both threes. So it's a $6 million exemption. You're hitting that max rate at $15 million. So if you own more than $15 million worth of stuff, the top rate is now 35%. Over a third of your stuff is going to the state. So what this means is that if you have a bigger estate, call your estate planning attorney and get in line now.
And it doesn't have to be bigger. Like, yes, it hits them harder, but the fact of the matter is, you start at the million, and I think you said it started at what, 12% is what you said? 10%, right? And it incrementally goes up from there, right? So, look, I don't know about you. I don't mind paying taxes for making sure that our roads are taken care of, all that kind of stuff. But there is a threshold, at least for me personally. And when it comes to legacy, I want my kids, or whoever I'm giving the money to get as much of that as possible without paying the taxes on it. So that's a big issue for me.
Here is the crux of what this is going to do. Anybody who knows about this is going to do proper planning, whether it's working with us, working with an attorney, working with a CPA. Realistically, you should work with all three, have it coordinated. But those people that have a boatload of money are going to look at it and go, oh crap, I really got to get this taken care of. Where this is going to hurt is the people that are like, oh, I'm good. And they're going to be good until they aren't. And then if you lose out on that first $3 million exemption, and so now instead of it being 15, you hit it at 12.
Yep.
Or like, heck, you hit it at 10 and that becomes a 30% tax. You hit it at $6 million plus the original 3, you hit it at 9, that becomes a 26% tax. Like, you get to these higher tax rates a lot quicker. And even if we see the tax exemption go up at, say, 3%, like, we're somewhat expecting that real estate is going to outpace that. And so ultimately, if you own your own home or own multiple homes in Western Washington or a vacation home somewhere, you're going to wind up with an issue here. And the more and more that we have, folks, I'm going to take a shot at our group that we meet with on Thursdays, all the Californians moving up here. And we've got one of them in our group that might be joining us.
Bukacek, I hope you're listening to this episode.
Well, I was actually thinking of Juan, but it's all that money from California that's coming up that's raising up the real estate up here. And so it'll be interesting to see what winds up happening as we go along here. And like this
the key thing here is we're only talking about Washington State. If the federal comes down to like the $7 million figure, which has been out there,
yeah.
Now you got the federal issue as well. Now we don't know what's going to happen. The federal is still
it's still up in the air.
It's still up in the air. But the point of today's episode is you should have your estate planning documents in place, and it may not make sense to just have a will.
No, it doesn't make sense to just have a will if you're in these conversations.
Yeah. We're trying not to make blanket statements, but the fact of the matter is look, we all care about our family members. We want to make sure that they're taken care of. We want to make sure ourselves are taken care of, because estate planning is not just about leaving the money behind. What if you become incapacitated? How are you going to get taken care of? I faced that with my brother. I don't wish that upon anyone. So get your estate planning done and make sure you're working with the right people that know how this works together. And you already said it. If you're not working with your advisor, CPA, and estate planning attorney all at the same time, I hate to say it this way, but you're probably doing it wrong, because those three people have a huge effect on what you're trying to do. And they all have their own areas of expertise, and they should be communicating with each other.
If they're not communicating, they're not coordinating. If it's not coordinating, they're likely inadvertently working against each other in some manner or another.
Whether not on purpose either.
Right.
It's just what happens when you've got three siloed professionals working without talking with one another.
100%. Like, we were just over in Eastern Washington and like giving a presentation on, life insurance and taxation and retirement planning. And one of the other speakers was talking about estate planning. And like, she's an attorney that we happen to work with a decent amount. And we got to talking afterwards, and we're talking about like, hey, what's going on with the estate tax in Washington? What's going on with the feds? The current best estimate is that it's going from a big number down to about 7, which is still a fairly big number, but it's going to hit a whole heck of a lot more people.
Yep.
And most people, like, one of the things that we're being told is that as attorneys are getting busier and busier and busier, their way of regulating it is simply to charge more and more and more, which is why I go back to the comment of get in line now. Because, like, I don't know, that gal is booked out about 2 months right now.
Yep.
So, like, even if you say, oh, this is an issue, I should look into addressing it, like, it might take you 2 or 3 months to find the right attorney for you and be able to interview 1 or 2 of them. By the way, make sure that you interview multiple attorneys when you're doing this. Like, find a good fit, find somebody who you click with, find somebody who thinks the same way that you do, make sure that they work with your existing professionals, those types of things, and make sure that they have a specialty in estate planning in the state that you live in. If you live in Washington, great, find somebody who's registered in Washington. You live in Oregon, it's different down in Oregon. It's a lower number that it gives the exemption. If you live in other states, there are other rules. So we need to make sure that we're working with a professional who is familiar with that state.
So as our listeners are starting to research that information, I'll highlight a couple episodes that we recorded last year with Rob Bukacek, who helps with even some of our clients. He has a lot of knowledge on the federal estate planning aspect. He's in California, so he's got some knowledge in California as well. But these specific episodes highlight some mistakes that we commonly see in the estate planning piece. So it's episode 274 and episode 281. So head over to beerandmoney.net, and if you check out those 2 episodes, and we'll put those in the show notes here as well. Check out those episodes if you're starting to look at your estate planning conversations with your peeps.
And I know that we mentioned this the other day, but like, we've hit episode 300. So like, starting to hear some of these episode numbers, like, wow, we've built up a bit of a library here, Ryan.
Yeah, no, it's been fun. We enjoyed drinking a beverage and talking about money, and hopefully our listeners are taking some of this stuff away into creating action items, which is the whole point of our podcast. So Alex, it's been awesome. Let's keep doing it. If you guys have any questions, head over to beerandmoney.net, and at the top of the page, hit that contact us, and that'll ping us with any questions that you might have.
If there's a topic that you want us to go into more detail on, or you want to ask Ryan a question or Alex a question or both of us a question, head on over there, drop that in there. It's private, goes just to us. We'll reach out, or we'll tackle it in an upcoming podcast.
So as always, we hope this episode is valuable for you. And Mr. Collins.
Cheers.
This podcast is for informational purposes only and is not to be construed as tax, legal, or investment advice. Although the information has been gathered from sources believed to be reliable, please note that individual situations can vary. Therefore, the information should be relied upon only when coordinated with individual professional advice. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Quantified Financial Partners, and opinions stated are their own. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult your tax, legal, or accounting professional regarding your individual situation. All investments and investment strategies contain risk and may lose value. This material is intended for general public use. By providing this content, Park Avenue Securities LLC is not undertaking to provide investment advice or a recommendation for any specific individual or situation, or to otherwise act in a fiduciary capacity. Please contact a financial representative for guidance and information that is specific to your individual situation. Ryan and Alex are registered representatives and financial advisors of Park Avenue Securities LLC, OSJ 200 Market Street, Suite 1850, Portland, Oregon 97201. Phone number 503-221-1226. Securities products and advisory services offered through Park Avenue Securities, member FINRA, SIPC. Financial representatives of the Guardian Life Insurance Company of America, Guardian, New York, New York. Park Avenue Securities is a wholly owned subsidiary of Guardian. Quantified Financial Partners is not an affiliate or subsidiary of Park Avenue Securities or Guardian. Ryan Burklo, CA Insurance License Number 0K24924. Alexander Collins, CA Insurance License Number 0H24806.
Data and information is for educational purposes only and is based on current political sentiment and was accurate at date of recording. Opinions and data are subject to change without notice. Tax laws are always subject to change. Please speak to a professional regarding your individual situation. 7986324.1. Expiration date May 2027.